ISMStrategy.com.
Hi, it's Chris again, looking at the upcoming Tuesday, September 2nd trading session. I have the economic calendar in front of you, and immediately during this session, we have something to pay attention to. We have the Aussie rate decision, which of course is highly influential on the Australian dollar. The thing about this is, though, is we're not expecting any type of move as far as interest rates, but the statement could be very important, and that's what's going to make it difficult. If we get a hawkish tone, then the Aussie should climb. If we get a dovish tone, which is probably more likely, the Aussie should fall. That being said, though, expect a lot of volatility. The markets really don't have a whole lot going on that catches our attention until we get down to the U.S. Manufacturing PMI numbers at 56.8 expected. That could drive several markets. That could drive the S&P 500, which is on the verge of a breakout. It certainly could drive the U.S. dollar and, by extension, the euro dollar. And then I also believe that it could have a tangible effect on the light sweet crude market, as that market needs good news. Good manufacturing numbers should help with demand for crude oil. Later in the day, we have GDP numbers coming out of Australia, but quite frankly, after the interest rate announcement, I can't imagine them moving the markets too drastically unless they come out much stronger than anticipated or much weaker. It would have to be a real shocker. Quite frankly, I think that will have very little effect on the Aussie dollar or the markets in general. In front of you is the Aussie dollar. You can see that we had a hammer after a slight breakout, but really, I mean, there's a lot of different ways you can go with this. It's just really choppy. You could maybe slide it down a little bit and find some support and resistance. Looks like we're going to drift a little bit lower. We need to break below the bottom of this hammer, though, to do so. Again, this is going to be based on the announcement, so it's going to be difficult between now and then, but we should get some drive in the Aussie. If we drive lower, I'm not looking for some type of meltdown. I just think we just kind of continue where we've been. One of my favorite markets right now is the S&P 500. You can see that on Monday we are closed, but the Friday candle was very bullish. We closed just 2 points underneath the high at 2005. Those ISM numbers could be enough to just throw the market right over it. If we do that, I think the market continues to go higher. It will continue to be a buy on the dips market. If we fall, if we get a less than desirable number, we'll probably just consolidate for a while until we get a reason to go higher. Quite frankly, the market just wants to, but it might be getting a little bit exhausted. So unless we get a really good number, it's probably just going to go sideways. You can see that on a day when the Americans and Canadians weren't even around, the euro still couldn't pick up traction, forming a shooting star, which of course is very negative, especially at the bottom of the down move. That shows that they tried to rally and just couldn't. Because of this, I believe that the euro continues lower, probably aiming for about 1.30 before getting significant support down there. Probably bounce from there. I think the real support really is at about 1.28, so we could see some significant weakness. There is an interest rate announcement this week. Don't expect anything out of that at this point, but the statement, of course, will be parsed and scrutinized. And finally, looking at the oil markets, the light sweet crude, you can see we crashed right into the $96 level on Friday. We really haven't done anything. It doesn't show it on this chart. We're flat from electronic trading, a little bit that was done on Monday. Those ISM numbers throw us over the 96 level, and we should consolidate up to about 98.5. Probably 98 is a little safer move. Most of the time when you get in this type of consolidation, you eventually hit the top. Bad numbers, on the other hand, could sell this market off, so it's going to be very sensitive, that ISM manufacturing number, just simply because it could give you an idea of potential demand going forward. And with that, I've taken a look at the Tuesday, September 2nd trading day.